My $224,000 portfolio just lost $6,000 in a single stock. Today I'm going to give you a little bit more information about that and why I'm so concentrated. Over the past week, overall my portfolio lost $4,524. This is with my top position, Nvidia, actually going up. Now, my portfolio went down about 2%, while the S&P 500 went down about 0.6%, so I am underperforming the S&P on the week, but not exactly for the reason that everybody's talking about. Actually, what's interesting is the AI trade this week has been relatively profitable for me. Nvidia, AMD, and all of the other AI names that are in my portfolio added about $2,000. It was a completely different stock that contributed to all my losses. Nvidia was up around 2%, AMD up around 5.3%, and VGT, or the Vanguard Information Technology ETF that I've been invested in for about 7 years now, was up only 0.18%. So those were all really good, but overall my portfolio took a massive hit with CrowdStrike. CrowdStrike dropped 9.75% this week, absolutely demolished a portion of my portfolio. But that's sort of the risk that I've been taking. CrowdStrike is about 27% of my portfolio weighting, and this is just something that I have to accept with such a concentrated position. Overall, without CrowdStrike, I would have been up about $1,800 on the week, but because CrowdStrike lost over $6,000, almost $6,400, I'm now down $4,500 on the week. These are my portfolio weightings just for your reference. In this column over here, you can see the weight. Nvidia is 43.5% of my portfolio, while CrowdStrike is 26.3%. That was actually higher at the beginning of the week, but again, when you drop not almost 10% in a single week, your portfolio weighting is going to be less. But overall, highly concentrated. I think about 90% of my portfolio is concentrated in the top 5 positions. That's not what most people would recommend that you do, but it's something that I have done time and time again over the past 7 years since I've started investing when I was 18 years old. When you look at my top 3 positions alone, those are 82% of everything that I own. That's a choice. That's a conscious choice that I make every single year to put all of my money and all of my positions into my highest conviction theses. Obviously, I think Nvidia is essentially the picks and shovels of the AI revolution. They keep on making these amazing chips that everybody is gobbling up, putting in their data centers, training their LLMs with, but also, running their large language models on. CrowdStrike is a massive cybersecurity play. It's a highly volatile position. I would say even more volatile than Nvidia recently, at least in the past 6 months. And CrowdStrike is probably the key player in AI cybersecurity, and it's not something that you can do away with. So even though that it dropped 10% in a single week, that's something that I have to swallow. That's something that I have to essentially get used to and accept if I'm going to be trying to beat the market. This entire strategy is not for the faint of heart. Let's just put it that way. This entire week, we've seen in the headlines over and over, AI capital spending is ballooning with no near-term return. Google just reported they dropped, I think, 6% in a single day after the earnings report. And that was because they reported for the first time, I think ever, that they went cash flow negative. And really what I think is, yes, this is scary, and a lot of the Mag 7's value is tied up in their free cash flow and how much it produces. But I also think that we are in an age where we have to allow these companies to invest in their futures, and I think AI is going to be a part of those futures. So if you are a company and you're not investing in data centers or AI build out, and especially if you're a company like Google or Microsoft or Amazon, when you have to put billions of dollars into building out these new data centers with these brand new chips in order to drive demand. I mean, Google's backlog for their Google Cloud is over $500 billion. That's insane to me. That's so much money. And Google's dropping 6% on the day. $800 billion was rotated out of the Mag 7 this week just because they're investing in their business. That doesn't necessarily make sense to me. So I think mainly this was a rotation and not liquidation, right? These are still the best stocks in the world. Google is an excellent company. And my AI names rose while the overall index failed. CrowdStrike, I would say, is an AI name, but it's more in the application side of AI than in the build out of AI. The other thing that I think isn't being talked about enough is the fact that we are literally in the middle of a conflict. So if we look at my portfolio here on Allen Global Intelligence and we scroll down, we can look right now at this heat index, this geopolitical risk, and right now it says that a direct US-Iran war is in its second week and has effectively shut the Strait of Hormuz, while Houthi attacks and Saudi counterstrikes have turned the Red Sea into an active war zone, pushing oil back above $100. We actively have oil being pushed higher and higher and higher. It's been up about 30 to 40% in a few weeks. And this is all because of the conflict that's happening within the Strait of Hormuz, in Iran, the Houthis. And what's useful about this information is we know that when oil rises, the cost of pretty much everything else, the cost of business rises. So that's going to push inflation higher, that's going to make the Fed more hawkish, and that's overall, in English, that's going to be bad for stocks. So this isn't just Google had negative free cash flow or people are scared about the AI trade. People are scared about the world right now, and we really need to keep that in mind. When we go over here to the Global Intelligence tab, you can scroll over here and click on Iran, and you can see everything that's going on right now. There's literally live updates occurring with the US and Iran. We're seeing that a US service member was recently killed in a strike. And the other thing is, literally one of the first headlines on here is, Iran's new leader is more open to pursuing a nuclear weapon, US intelligence says. I mean, what are we expecting? Are we expecting the conflict to cool down with a headline like that? Listen, the whole point of this is, the world is in a very uncertain state. We don't know if President Trump is going to conclude this conflict with Iran. We don't know what's going to happen, and that uncertainty is making the market fall. If Iran were not a factor here, I actually think the market would be either consolidating or actually making very large gains. But the fact that we don't know how long this inflation is going to be affecting our country, we don't know how long oil is going to be elevated, and we don't know how the Fed is going to respond to a prolonged conflict with Iran. We have to take all of these things into account when we're looking at our portfolio. So for me, I'm holding, I'm not scared. Yes, the world is a little bit scary right now, but that doesn't mean that I have to be. So I'm going to hold fast and steady and make sure that I'm making good decisions with my portfolio. None of the theses of my companies have changed, and I think money is still being poured into them. And if anything, this is a great buying opportunity. Thank you guys for watching, and I'll see you guys next time.